If you have been trading for last few years, especially in Nifty Bank Nifty, you know that nowadays Nifty and Bank Nifty started behaving very abnormally because of various factors. And also you know that there are rumors of change in F&O segment and all this. So being a trader, you should always have a plan B. So that means along with trading in Nifty Bank Nifty, you should have another instrument also which is as big as Nifty and Bank Nifty. So that is why you know that few weeks back I started a video series on commodity trading on my YouTube channel, and already I made some videos on crude oil, and also you know that few days back I launched a course, that is the crude oil trading course, where many of my ex-students who are trading in Nifty Bank Nifty, they have already purchased this course on crude oil. So after introducing crude oil, I got many requests from my followers asking for more videos on other commodities. So that is why I came out with a new video today, that is the gold trading strategy. So after the crude oil, the next important commodity which is globally traded and widely traded, that is the gold. So this week I am introducing how to trade gold, and in this video I am going to reveal 4 important tips and tricks to trade in the gold. And those 4 things are, first one is I am going to reveal which is the best time to trade in gold. Unlike Nifty Bank Nifty or unlike trading in stocks, you know that it is open only from 9:15 to 3:30, but gold is a 23 hours market. Not only traded in India, it is traded globally, so it's almost 23 hours market. So that's why you should know that which time is the best time to trade in gold. And second thing, I'm going to discuss about the technicals of trading gold. So that means I'm going to show you one secret method to trade in the gold purely based on price action, and the secret method which I am going to discuss in this video you must have not seen anywhere on other YouTube videos. Third thing I am going to discuss is about the fundamentals of trading gold. Unlike Nifty Bank Nifty where we focus only on technicals, but when you are trading in gold you should be aware about the fundamentals. So what are the fundamentals you have to look for? That is what I am going to discuss. And the fourth thing I am going to discuss about the seasonality in gold. That means there is some seasons in a year you will see that most of the time gold rallies. So there was a research done for last 30-35 years, and there are few months in a year where most of the time gold rallies. So that means it's a very good strategy for swing traders or a short-term investor who like to hold gold for a couple of months or 3-4 months. For them, there is a research paper which shows that last 30-35 years, which are the months most of the time gold rallies. So I made a small presentation on those 4 important things which I am going to discuss now on my laptop. Okay guys, now let us start with the first point, that is the which is the best time to trade gold. As I discussed earlier, gold trades for 23 hours in a day globally. When it is trading globally, mean it trades in all Asian countries, European countries, US. So you know that since there is a time zone difference between all the countries, it trades in different time zone in different country. So when you are trading gold, you need good movement in the gold, right? That means good volatility. If gold is not moving, it is staying very tight range, then how you can make profit? If you want to make profit, then you know that it has to have a volatility, it has to move somewhere upside or downside. Best movement comes in gold when European and US market overlaps. Such time gold has a highest volatility. You can see from this image, this is the 24 hours in a day. It is in the GMT, okay, not in the Indian time, neither it is in the US time, it's a GMT. And if you don't know what is the time difference between India and GMT, it is 5.5 hours. That means when it is showing 12 o'clock, that means Indian time 5:30 a.m. in the morning. Okay. So just for your information, when it is showing 12 o'clock, that means 5:30 p.m. in Indian time. So that means you can see that in this image, it will show you that Asian market opens around this time, European market opens around this time, and American market opens around this time. So you can see that this is the volatility graph. You can see that when Asian markets are trading, volatility is generally low in gold, but as the European market starts trading, volatility will go up, and it will touch the extreme when American and European markets are overlapping, and American markets are overlapping from this time to this time. So what is the 12 p.m.? 5:30 p.m. So that means Indian time 5:30 in the evening till 8:30 in the evening. For that 3 hours, most of the time you will see high volatility in the gold. Okay, so that is what this image also showing, that you can see that this line is going up, that means volatility high during that time. Okay, now you can see that I have come to the gold chart. It's a 1 hour gold chart. All right, and as I said, since it's a 23 hours market, you hardly see any gap down. It looks like continuous market, but you can see that dates are different. So you can see that this is the September 3rd, September 4th. So if you don't know how to know the which session currently it is trading, so there is a indicator for that. You can go to the indicators and you can type session. Okay, the one what you see here, you can plot it. So once you plot on your chart, you can see that it will show you the all in color coding. So in the color coding, blue color what you are seeing, that is the Asian market. Green color what you are seeing, that is the European market. And the red color what you are seeing, that is the US market. And also you can see that there are brown color also here, right? Here brown color. Here you can see that brown color. Brown color. What is that brown color? Brown color is the overlap of European market and the US market. Okay. In between the brown zone, what you see, that is where European market and US market overlapping. And that is the time you will see highest volatility. That means huge move comes in gold most of the time. Okay. Huge moves comes in the gold most of the time. And also you can see that even volume also goes up during that time. Right? Volume also goes up. Volume also highest during when US and European market overlapping. If I go to the left of my chart, you can see that regularly it shows that huge movement comes in the gold and volume also increases when there is a overlap between the European market and US market. So this is not any strategy and all this. I'm not discussing strategy here. I'm just telling you that best time to trade in gold is when European market and US markets are overlapping. And the second thing which I'm going to discuss today is about the technicals in gold. Gold is one instrument I have seen technicals working very well. That means support, resistance, breakout, retest, everything. Even I have seen that technicals can work better than even Nifty, Bank Nifty or stocks. So gold is one instrument where technicals can work very well. So you will see now I am going to discuss second point, one secret method to trade in the gold. Very simple method, very powerful method, purely based on price action. Okay, next one is powerful technical method in gold. As I said, technicals like support, resistance and all this work very well in gold. Like supply zone, demand zone, order blocks, breakouts, retest, all this can work very well in the gold. So there is one method of trading in gold, especially for swing traders. For that, criteria is whenever you see long wicks on the candle on 1 hour time frame is an indication of start of a big up move in a gold, provided there is a uptrend or a sideways trend, not in the downtrend. That means the condition is trend should be, overall trend should be upside or slightly sideways is fine, not on the downside. Okay, so when you see trend is upside or sideways, and you will see color of the candlestick doesn't matter. If you see that 1 hour candle is making a huge wicks on the downside, that is one of the high probability trade to go long. Sometimes you may see that body is red, but it ends up making a huge wicks. That is also high probability trade to take a long position. You know that if you have been following me on YouTube, I'm not a big fan of pin bar, right? I don't give too much importance of pin bar. I talk about the full body candle. Even in my course, day trading course or scalping, most of the time I give most importance for the full body candle. But in the gold, what I've seen, this kind of pin bars can work very well on 1 hour time frame, not on smaller time frame, okay, not on 5 minutes, 15 minutes, only on 1 hour time frame, you will see that if you see this kind of candlestick and immediately taking a long trade, once candle forms making a huge wicks, most of the time that is the indication of start of a up move in gold. Okay, so if you see this kind of candlestick, most of the time from there big move can come. I give an example here on the chart. On the chart, you can see that overall trend is on the upside, right? Overall trend on the upside. Here it is sideways and again upside. So you can see that some candles making a huge wicks, right? Huge wicks here. This candle making a huge wicks here. This candle making a huge wicks here. This candle making a huge wicks, right? Whenever you see huge wicks on the candle, that is the indication of big up move likely from there. And the third thing is about the fundamentals of gold. That means when you are trading in gold, unlike Nifty, Bank Nifty, we only look at the technicals, right? Support, resistance, supply zone, demand zone, price action. But when you are trading in gold, you have to look at the fundamentals also. There are many fundamentals, but today I am going to discuss one important fundamental which you have to look for when you are trading in gold. Important fundamental to watch in gold. So gold, when you're trading gold, along with technical, you should have some knowledge about fundamentals like interest rate cut, what is the inflation in US, because gold is mainly traded in US dollars. That's why you have to keep a watch on what's happening in the US. CPI data, payroll data, all these are very important when you are trading in gold. But one of the most important, you have to keep a watch on US dollar index. Okay, if you have never seen the US dollar index, then you should start following the US dollar index, because gold has an inverse relationship with US dollar. That means, what I mean by inverse relationship, that means most of the time if you look at the chart of US dollar index, if it is in the uptrend, then you will see that most of the time gold is going down. Or sometimes you see that US dollar index is going down on the chart, then most of the time you may see gold is going up. That means keeping as a US dollar index chart as a reference, you can take good trades in gold most of the time. Why it has an inverse relationship? Because most importantly, you know that when dollar index is going up, that means it is gaining strength, and gold is traded in US dollars. That means it is becoming expensive, right? So that is why you see that most of the time when US dollar index is going up, you will see that gold is coming down. Or sometimes you see that US dollar index coming down, gold is going up, because now it is becoming cheaper for people to buy gold, right? Because US dollar index is going down. So this is what you can see, that US dollar index along with the gold. The candlestick what you are seeing here, all these are gold. Okay, this is the gold chart, and the yellow line what you are seeing, that is the dollar index. So for example, you can see that somewhere from here, US dollar index started going up, and what happened with the gold? You can see that gold has started coming down. Then somewhere from here, US dollar index started coming down, right? From here, US dollar index started coming down and gold started going. For example, again from here, you can see that US dollar index was falling, but gold was going up, right? So that is what known as inverse relationship between the gold and US dollars. Now we'll go to the chart and we'll see currently what's happening. Okay, now you can see that I have come to the live chart of gold. This is the gold chart. You can see that candlesticks what you are seeing, all these are gold chart, and this is the US dollar index. Okay, so I am interlinking US dollar index along with the gold. So for example, we'll take it from here. You can see that from here, US dollar index price started going down, and what happened same time? Gold price started going, right? So somewhere here you can see that US dollar started making consolidation and started going up now, US dollar index. Same times, can you see what's happening with the gold? You can see that now gold price is coming down. Gold price is coming down and US dollar index going up. So that is what known as inverse relationship. That means opposite. That means US dollar is going up, gold will come down. Same time, if US dollar is coming down, then gold will go up. But remember, most of the time, but not all the time. Okay. You can keep this as a reference when you're trading in gold, that what dollar index chart is doing, whether dollar index is going up or down. On based on that, you can take the trade strategy. Maybe I'll discuss in future video, but here I'm just discussing relationship between the gold and US dollar. For example, you can see from here also, somewhere from here, dollar index started coming down, and same time what happened, gold price started going up. So that is what I was telling you, that if you are trading in gold, then keep a watch on US dollar index chart also. And now the fourth one. Fourth one is seasonality in gold. You see that specific time of the year, most of the time gold rallies. And there is a research paper which done on last 30-35 years, and it shows that there are specific period in a year where gold makes a big rally. Okay, now the last one is seasonality in gold. So it was observed that November, December, January, February months are historically bullish for gold. So based on research on last 30-35 years, it was observed that from November to February is most of the time gold rallies. How this information can be useful? One can be for swing traders. If you are a swing trader or a positional trader who holds gold for 3-4 months period, such time you can buy around November and you can sell around February based on historical data. This image I have taken from the Google. You can see that this is the seasonal pattern in gold, which says that since year 1973, average monthly return, you can see that January and February months, most of the time it gives return of more than 1%, almost 1.5%. Again, November and December 2 months, you can see that it gives more than 1% return historically. So remember, this is historically, it's not every year after year, most of the time. Buying somewhere beginning of November, holding on to till February can give you good profit, right? So now let's go to the chart and we'll do some back testing and see really November to February was a historically bullish for gold or no. Okay guys, now we have come to the gold chart and you can see that I have plotted here gold on monthly time frame. M means monthly time frame, and I have price data somewhere around May or June 2017 till now, that is the 2024 September. So we saw that historically gold trades from November to February mostly bullish, right? So that means buying around November month and selling February month should have been given good profit. All these are monthly time frame candlestick. Let us say where is the November of 2023. Okay, so this is the November. You can see that where I kept the mouse, that is the November, right? So November to February, that means from this candle till this candle, right? You can see that yes, it was a bullish. Now let us see about the 2022 November till February 2023. This is the November 2022 and this is the February 2023. So you can see that if you bought at the beginning of November month and if you held on to your trade, it would have given you good profit in gold. Now we'll see the next one, that is the 2021 November to 2022 February, right? That is from here to here, right? Again, holding on to this 4 months would have given you good profit in the gold. Now let us see the next one, that is 2020 November to 2021 February. So here you can see that here it didn't work, right? Because from November till February, it was not a bullish, it was bearish. So here it didn't work. Now let us see what about the November 2019 to February 2020. So you can see that here it worked. From November to February, it gave a big move. 2018 November here till February 2019. So you can see that it gave you good profit if you bought in November and sold it in February, right? Now let us see the last one, that is 2017 November till 2018 February. So you can see that From here to here, yes. Here also it give profit. I don't have historical data before 2018, but if you have a historical data, so I suggest you to do the back testing and see whether November to February, most of the time, whether gold has historically stayed bullish. So that's it guys about today's video on 4 important points you have to remember while trading gold. And I'll be making few more videos on gold, and also I launched a course on crude oil where I discussed in more detail about 10 intraday strategies, and also I discussed many important points about trading crude oil. If you have still not purchased my crude oil course, then you can go below this video in the description section and you can check the detail. If you are interested, then you can think about buying my crude oil course. So that's it guys from my side. I'll see you soon with a new video. Until then, bye and take care.